just jump right in. So hopefully you had a wonderful Thanksgiving, guys. Oh, by the way, there was an elf sighting in Desert Ridge. If you didn't see that on social media, I may or may not know that guy, but there was an elf sighting in Desert Ridge. All right, so let's get into it. Kind of what's happening this week. There's a lot going on. So we've got. Hold on, I'm going to remove this real fast. We've got a lot going on. We've got manufacturing coming out today. Now, I want to let you guys know this. Our economy, and don't listen to the media. We look at the numbers. We look at everything on when the bond traders do and the stock traders. So I listen to kind of what they're saying. Manufacturing was at one of the lowest points it's been in decades. The point of almost, and this was sold by one commentary or told by one commentary, almost depression levels in manufacturing. So our manufacturing sector of our country is not in good shape. So hoping that that will change. We had construction numbers coming out. It was mediocre. Tomorrow is JOLTS numbers. That's a job opening and labor. Basically, all of the companies that are offering jobs that are open, that's that number. So one of the things that I don't like about this number, so job opening across the country, is because we can all work remote now, these job openings are done on a national count. So companies are advertising their job openings to every state. So let's just say one person, one company posts a job to all of the states in the Southwest, but it's one job. That job will be counted for each state it's in. So maybe 6 or 7 different times. It's not accurate. So they need to change their data and how they're collecting data to make it accurate. But these jobs openings are less than they have been in a while. So the labor market this week is going to be very, very important. We have ADP coming out on Wednesday for the private payroll change. And then we have factory orders. Fed Chair Powell will be talking on Wednesday. And the beige book is kind of like the book of secrets, right? And then job cuts on Thursday, joblessness, continuing joblessness claims on Thursday as well. This is kind of a scary number. This jobless claims continues to rise, which is not a good sign for the labor market. So initial jobless claims supposed to come in about average, but it's the continuing jobless claims that's the problem. And then we've got trade balance going on. Now, Friday, the unemployment rate, it should tick up a little bit. We have non-farm payrolls. We've got a lot going on. It's basically jobs week. And then some consumer sentiment at the end, which is not as great as it should be. So it's going to be an action-packed, but it's basically jobs week, and that's what we need to be focused on. The GDP actually stayed in at 2.8%. Not bad, but I mean, a 3% clip is supposed to be really, really healthy, but about 3/4 of this is government spending. So that's not sustainable. That's not the true growth of our economy, because most of it is government related. So not a great way of growing. We don't want the government to grow faster than the rest of the country. That's not a good sign. And then here's the continuing unemployment claims. They are continuing to rise. Continuing claims rose by 9,000 to 1.9 million people receiving unemployment checks. So it's a big number. Bottom line, we'll continue to watch this. Elevating trend in the continuing claims has been around, and hopefully we'll get it swinging the other way soon. So we always talk about inflation on rates and how mortgage rates react. Notice that the PCE, remember, it was going down, and I said it was going to go up, and lo and behold, it went up. And the core year over year, it went up. And remember, it's because we're replacing, it's a 12-month average, and this month's numbers are put into the equation. And a year ago, that month, the corresponding month is removed. That number was low. This number was normal, but it looks like inflation has gone up. So PCE has gone up. And so all of the markets are kind of like, ooh, what's going on with inflation? Is it stuck? Is it stalling? What's going on? So We saw a little bit of stalling in the markets. I'll go over that as well. Pending home sales wasn't bad. If you look at 2023 average, we're a little bit above average on that. If you look at 2021, now mind you, those were the COVID days. It was kind of crazy. If you left, I wish this graph showed previous to this, because in 2019, we're about neck and neck where we should be in a normal market. So keep that in mind. If you think you're struggling now, it's actually a normal market. We just were very blessed during the 2020, 2021, and even into 2022. So Case-Shiller home price, here we have the appreciation going up month over month. And some just interesting year over year. We are coming down a little bit, but it's still positive. So it continues to moderate. So we're in a decent clip. People that thought they were going to wait to buy are kicking themselves because they missed out on some appreciation. But year over year, we're at 3.9% for the Case-Shiller home price index. So not bad. So what's happening with the markets? What does this all translate into rates? Well, let's look at the candlestick charts. If you look at last week's, which is the top left, we saw a big bump upward, and the mortgage-backed securities bounced off this lower level up at the top left, bounced off this lower level and went right up, and we started to gain some really good ground. Okay, now that candlestick ended up being down here on the right, this candlestick. So we finished the day higher and with room to go, and then later on in the week, we continued to press, and Friday we stopped right on this Fibonacci level. I talked about this a lot. These levels are like magic. The markets test them, they go right up to it, and then the selling stops. Now this morning we bounced off. We went down, all the way down. This line shows where we were for the day, and this little tiny thing is kind of where we started and where we ended. We went down and we came back up to where we started, and we're trying to put pressure on this Fibonacci level. If we can get some numbers on the unemployment and the jobs that are favorable for mortgage bonds, which is weak numbers for the economy, if we can see that, we may be able to pierce through this and gain some more ground and get better rates as we move through. This is the 10-year. And remember, when the 10-year goes down, that's a direct correlation with mortgage rates going down. So the 10-year went down, down, down last week, and we're going up, but we stuck right on this 200-day moving average. Excuse me. So we're stuck on it right now. I hope we can stay beneath it so we can continue to see this drop. But we've got 100-day moving average. We've got the 50-day moving average that are in our way as we kind of pull it downward. So we're in a good position right now. We're kind of stuck. So we'll see what this employment data gives us. Here's where rates shake out. Remember, left on the top left is last week. We came in at 7.03 to start the week last Monday. Right now, we're at 6.88. So the trend was a little bit weaker to start the day. And we're kind of in that position just because of where we are in the candlestick charts, but we're going to continue to monitor that. So remember, these numbers are not a 680 credit score, 5% down condo rate. Okay. This is a highest credit score of 780 with 30% down on a single family detached home, primary residence. This is the creme de la creme. So if you look at these numbers and say all of my buyers should be getting this, that's not how mortgage rates work. If you want to get a one-on-one little lesson on how that works, maybe I'll do that I'll be happy to do that for you, but maybe I'll do it for you as a group as well coming up. But this is where we're at right now, and I believe we're probably going to stay get a little bit worse today. I don't think we'll pierce through that level of resistance just because the way we started the day. So if we do, that's great. If not, then it is what it is. So that's really it for the updates today. I do have one major update I want to talk to you about. Hold on 1 second while I stop my share. And I am going to show you something that I think you guys will love. And we found a dog, and we're trying to find a home for it. It was out in the desert. Well, I can't find it. Where's Eddie? Eddie's so cute. So if you guys are looking for a puppy, come here, buddy. He's like a beagle mix of some sort of a hound dog. I'm going to get him real fast. Hold on. Look at this cute little guy. I mean, look at how sweet he is. Hey, buddy. He needs a home. So if you guys know anyone looking for a puppy, we've got one. He's probably about a year old. And he's about 40 or 50 pounds, but super, super sweet dog, little boy. So if you have anyone looking for a pup, let me know, and we will gladly help you guys put them into their home. But other than that, well, that's all we have today. It's a short one just because I was dealing with the puppy all night. So I didn't have as much time to put some stuff together for you. But any questions on what's happening with the market? One of the things I'm going to be doing is there's a lot of fear, there's a lot of questions, there's a lot of excitement, every emotion under the sun on what is going to happen to mortgage rates now that we have a president-elect that's going to be coming in that's a different group. How will that impact it? And the biggest question and fear that I see is these tariffs, how that will impact mortgage rates, how it impacts inflation. I'm going to unpack that for you in a very non-biased way. We're going to look at the history of tariffs and how they affect the markets on the tariffs, and really understand how that can impact us in the housing world. So I'm going to be putting that together over the next couple of weeks. It's going to take me some time because there's a lot of bad information out there, so I'm going to vet it properly. But I want to make sure you understand how they work, because there's a lot of misinformation out there, or just misunderstanding on how they do work, because we've had tariffs for years and years and years and years for every country. It's just part of the way it works. And I want to help you guys understand that, so you can answer that to your customers that are maybe fearful of buying because they think it's going to cause prices to go up or whatever their thoughts are. So that's going to be a big thing. I think that's the biggest topic moving forward. I'm going to really unpack that for you all. So any questions? Well, I hope you guys are all a few pounds heavier, and which meant you had a really nice, strong meal on this past Thanksgiving. And if you need anything this week, I will be available. And again, the new loan limits for the year are 805,000 for conventional. So there's some speculation it's going to be just under 800, but it came in at 805. So that's exciting. FHA is going to be announcing theirs as well. And my dog just howled and said hello. So, hey, buddy. But all right, guys, we'll have a wonderful December, and we will be in touch, guys.
Thanks, Sean.
You're very welcome.
Thank you. See you tomorrow in Prescott.
We'll see you then.
Thanks, Sean. I really wish you hadn't shown me that dog.
I know, he's so cute. I mean, he's the cutest thing ever. And
my dog passed away in May, and
oh, no.
I've decided that I would wait until probably October of next year for another dog. And I'm sitting there going, ah!
Well,
Because
this dog is I feel bad for it. It looks like somebody dumped him out into the desert because
yeah,
my son and his friend were out off-roading, and it
mhm.
was hiding in a bush in the middle of the desert.
Oh,
So
oh.
took a while to warm up to us, but now he's, oh look, he's stretching on the ground. What a sweetheart.
Yeah,
He's a cutie.
I have real problems saying no.
I know. Well, if you need to wait till October, stick to that. Don't make
Yeah,
any decisions.
yeah, sadly I do, because I'm doing too much now to be able to focus on another being.
Yeah. Yeah. It's hard. Puppies are hard, especially during the holidays.
Any dog is hard.
Yeah. Now, so we have 4 now dogs in our house.
Well, you may have them a while.
Yeah. Yeah. So we'll see how that
Well,
goes.
if you still have them in October,
Yeah, you never know.
uh,
We may.
you may.
Yeah.
Okay, well,
You got to
yeah, I'll keep in touch on that.
I will, for sure.
Okay.
Have a
Bye-bye
great day.
now. Yeah, you too.
I know, buddy. We'll see you guys.